Ethereum just experienced a dramatic price drop, catching both seasoned traders and casual investors off guard. In a matter of days, the price tumbled nearly 30% from its all-time high of $4,150 in late August 2025, wiping out billions in market value. The sharpest decline happened over just a couple of days, with a single-day fall of 7% around October 10th. One of the steepest drops Ethereum has seen this year. Prices briefly hit $3,500, sending shockwaves through the market and triggering a wave of panic selling among investors. As of October 12th, Ethereum is trading between $3,800 and $4,200, showing some signs of recovery, but the mood remains cautious. This volatility is a stark reminder of how quickly things can change in crypto. Even for a $500 billion asset like Ethereum, which many consider a blue chip of the digital world, the market remains shaky, and the recent drop has left investors questioning what's next, with some wondering if this is just the beginning of a larger correction. While there's been a partial bounce, the event highlights the high-risk, high-reward nature of crypto, where fortunes can change overnight. Major digital assets can lose a third of their value in days, reminding everyone that volatility is the norm, not the exception, in this space. Even experienced investors can be caught off guard by these rapid swings, no matter how much research or preparation they've done. To make sense of this, we need to dig into the reasons behind the drop, examine the broader market context, and consider what it means for Ethereum's future. Let's move past the headlines and get to the facts so we can understand what's really driving Ethereum's wild ride. The crash wasn't caused by a single event, nor was it something that could have been easily predicted by just looking at Ethereum's own fundamentals. Instead, it was the result of a complex mix of global and market factors, all converging at once to create the perfect storm. President Trump's announcement of new tariffs on China triggered a wave of uncertainty across financial markets, and that anxiety quickly spilled over into the crypto world. Nervous investors, already on edge from recent volatility, rushed to sell off risky assets to avoid further losses. At the same time, big players, known as whales, dumped massive amounts of ETH onto the market, intensifying the downward pressure. This sudden surge in selling triggered stop-loss orders, which are automated trades designed to limit losses, causing a cascade of even more sell-offs. The result was a snowball effect, a chain reaction that accelerated the price drop far beyond what anyone expected. Market sentiment shifted dramatically from greed to fear almost overnight, as many traders felt a correction was not only possible, but overdue after recent gains. Broader macroeconomic factors like rising interest rates and persistent inflation also played a significant role, with a potential Federal Reserve rate cut looming in the background. The tariff news was a shock the market simply couldn't ignore, amplifying existing anxieties and pushing investors to act quickly. Crypto remains deeply tied to global events, and this episode served as a powerful reminder of just how interconnected these markets are. The drop was less about Ethereum's technology or future, and more about external shocks and the psychology of investors reacting to uncertainty. In crypto, global headlines can move prices in minutes, making it one of the most reactive markets in the world. Understanding these triggers and staying alert to global news is absolutely key to navigating the volatility and protecting your investments. The price crash hit leveraged traders hardest, causing widespread panic and distress. When Ethereum's price plunged, thousands of long positions were liquidated. Exchanges sold off assets to cover loans, leading to a cascade of forced sales. Over $600 million in crypto liquidations occurred, with $235 million wiped out from Ethereum longs alone. This massive sell-off sent shockwaves through the market. Leverage amplifies gains, but also magnifies losses, creating a vicious cycle of forced selling. Traders using high leverage found themselves in a precarious position. Each wave of liquidations pushed prices lower, triggering even more liquidations in a waterfall effect. This relentless downward pressure was hard to stop. This process, while painful, flushes out excessive speculation and helps stabilize the market. It's a necessary correction to bring balance back. After the liquidations, Ethereum found support around $3,500 and began a slow recovery. This support level was crucial for restoring confidence. The episode highlighted the dangers of high leverage in volatile markets. Traders were reminded of the risks involved, but it also showed that buyers are willing to step in when prices drop sharply. This buying interest helped to stabilize the market. The market's resilience suggests underlying demand for Ethereum remains strong. Investors still see value in the cryptocurrency. Liquidations are brutal, but they reset the playing field. They clear out excessive risk and allow for a healthier market environment. The lesson: leverage can be a double-edged sword in crypto. It offers the potential for high rewards but comes with significant risks. Despite the drop, on-chain data shows bullish signs for Ethereum. ETH held on exchanges is at a 9-year low, signaling investors are moving coins to cold storage and planning to hold. Staking is booming. Over 36 million ETH, about 30% of supply, is locked up earning yield. This reduces available supply and selling pressure. DeFi activity is surging, with DEX trading volumes up 47% and total value locked near all-time highs. High on-chain activity points to a healthy, growing ecosystem. While prices fell, long-term holders and network users became even more committed. These are not the actions of a market losing faith. The fundamentals are strengthening, setting the stage for a potential recovery. Ethereum's foundation is getting stronger, even as prices fluctuate. Institutions are seizing the opportunity to accumulate Ethereum. Since June, entities like ETH treasury companies and spot ETFs have bought up nearly 4% of all ETH, double the rate of Bitcoin accumulation during the last election cycle. Spot Ethereum ETFs in the US now hold about 6.7 million ETH, worth $30 billion, with $1.5 billion in new inflows in a single week. This institutional demand helps absorb selling and supports prices. Companies like Bitmine are increasing their ETH holdings during the downturn, signaling strong confidence. Major firms and financial hubs worldwide are embracing crypto-friendly policies, boosting adoption. The UK just lifted its ban on crypto exchange-traded notes, opening new doors for retail investors. Global regulatory acceptance is growing, creating a powerful tailwind. Big money sees this dip as temporary, not a sign of weakness. Institutional adoption is reshaping Ethereum's future. Ethereum's technology is rapidly evolving, making the network faster and more scalable. The Denkin upgrade slashed Layer 2 transaction fees by 95%, making Ethereum more accessible. The Pectra upgrade raised staking limits and introduced smart accounts, improving security and usability. The next big leap is the Fusaka upgrade, expected in November, which will bring data sharding and boost transaction capacity by 8x. These upgrades are crucial for supporting more users and applications. Developers are already working on future innovations like Berkeley trees and full dank sharding for even greater speed and lower costs. Ethereum isn't standing still. It's a living, improving technology. Each upgrade strengthens the network's foundation and long-term potential. Continuous innovation is why investors remain bullish, despite short-term volatility. The network is getting better with every upgrade. Ethereum's evolution is its greatest asset. So, where does Ethereum go from here? Many analysts remain optimistic. October is historically bullish, and some predict a rebound to $4,300 to $5,500 if fear subsides. Key levels to watch: support at $3,500 to $4,000, resistance at $4,300 to $4,500. Standard Chartered raised its year-end target to $7,500, citing ETF demand. Others predict $12,000 or more. Not all forecasts are sky-high. Some are more conservative, around $4,300, $9,400. Long-term models suggest potential for $24,000, $71,000 by 2030, but take these with caution. Ethereum's large market cap means explosive gains are less likely, but steady growth is possible. It's now seen as a core holding, like a large-cap tech stock. The consensus: Ethereum's future is bright, but expect volatility. It's a long-term play, not a get-rich-quick scheme. Optimism aside, investors must understand the risks. Ethereum's volatility is extreme. 30% swings can happen fast. Leverage amplifies risk, leading to painful liquidations. Regulatory uncertainty remains. New policies could impact prices overnight. Centralization is a concern, as more ETH is staked with large players. Decentralization is key to Ethereum's value. Too much concentration could undermine trust. Ethereum faces competition from Bitcoin, seen as digital gold, and rivals like Solana. Upcoming decisions, like a spot Solana ETF, could shift market dynamics. Know where Ethereum fits in your portfolio and the risks it faces. Stay informed and be ready for rapid changes. After a wild ride, what's the smart move? First, don't panic. The drop was driven by short-term news and leverage, not weak fundamentals. Selling in fear could mean missing a recovery. Consider waiting for stability and let the market find its footing. If you believe in Ethereum's long-term story, holding through volatility is a proven strategy. Hodling. Remember your reasons for investing: technology, DeFi, or institutional adoption. For risk-tolerant investors, this dip could be a buying opportunity. Dollar-cost averaging, investing fixed amounts regularly, can help manage volatility. The right move depends on your goals and risk tolerance. Stay informed, focus on fundamentals, and make decisions calmly. In crypto, knowledge and patience are your best assets.